Value investing, a very simple concept. Buy low, sell high. It is an art of investment which has been endorsed by market gurus like Charlie Munger and Warren Buffett. The practitioners of value investing want to keep it simple. They want to buy good businesses which are available cheap and below the intrinsic value. So value investing is so cheap and all it involves buying, holding and selling higher. How come value investing is not a very popular investment style in India? What does it take to be a great value investor? And how can patience really reward a long-term value investor? Difficult questions, and in order to really demystify some of these difficult questions, for the first time in the history of Indian television, the two mighties have come together, ET Now and ICICIPruMF, to dissect the concept of value investing in Mumbai on 30th of December. It would be an education series not only for investors but for potential people who want to be rich. So value investing, I guess, Nimesh, the introduction was simple, but a very, very difficult method to really implement in real life.
Yeah, because you said in a very simple way that you buy cheap and when wait for a long period of time, and once the value comes in, then you sell when
That's
it
the
becomes
core,
expensive.
isn't
It's
it?
simple.
That's the core.
But in between there is something called as emotions also which come into play, right? There is a market, it's not only logic. What you said was very logical, but with the logic, market also goes on emotions. So when it goes on emotions, the emotions takes the human behavior, it's like a pendulum. We always overreact to any good news. What has happened in Russia, right? Because of Russia, Indian markets have come down almost, it came down by 1,500 points, right? So that is a swing. If oil goes down and if there is an issue in the Indian corporate sector is not affected by it in any manner. But problems in Russia does affect flows into India and does affect markets in India. So that leads to opportunities, right? So according to me, there is something in between called as emotions. Every emotions we overreact. Right, so that is where, so when we overreact, say a profitability drop, market overreacts to it. Yes. At that time, value investor takes a call whether this is a permanent diminution in the profitability of the company or is a temporary jolt. That is where he has to hold. He has to go against everybody is selling in the market and he has to be the buyer. So you are very lonely in value investing. So when you are lonely, it becomes that much more difficult because it's managing emotions in that relatively longer period of time. So that is one reason why value investing is that much more difficult. Second one is that most of the market in India is growth market. People invest in growth in India. So prices are decided by growth investors. So actually it's a great advantage as far as the value investors are concerned because price is decided by the growth investors. So price, when there is a bad news in the market, overreaction of price, and when everybody is selling and the price has corrected, that is time when he is buying. So similarly it happens when the prices go up again, right? So he is only a price taker. So it requires huge amount of patience. It is a lonely job at that point of time and it requires lots of knowledge and lots of guts also. So there is one, the technical part and the logical part of it. The second is the emotional part of it. It's a mixture of both.
I'm an observer, you are a believer, but next to you is a practitioner. So let's ask the practitioner. Why is value investing, which is a simple concept on paper, buy low, sell high, a difficult art to implement in real life?
Warren Buffett recently gave a speech where he said, I'm very surprised, I gave a speech in 80s on that value investing is the best way to invest. I've been saying it for 30 years and people haven't practiced it. That I think is the biggest, he said, thing that he finds very inexplicable in the world.
Nimesh, it's quite ironical. India has the oldest stock exchange in Asia. So it's not that stock market or investing in stocks is new to Indians. Yet, value investors are not the majority of the investors. Majority of Indian investors are growth investors. Why is that?
Around 25% of the funds that we have are in the value investing style, I would put it that way. So we are very clear that you should come into this product if you have got 3 to 5 years at your disposal. Don't come in this product for a year or two. I cannot say that it will always do well within a short period of time. But we have seen over a long, that fund has completed 10 years of successful run. In 10 years, it has given an alpha of 8%. If Nifty has given 18% in the last 10 years, this fund has given as high as 25% since inception. So that's the kind of alpha that is possible, but if you should have that kind of patience. So India challenges whether people will wait for that kind of fund. So while there are individual investors, we know a lot of HNIs who are into this business of value investing. They wait for a long period of time. So people have started understanding the value. People have understood that value is a good SIP product.
Then, just like one shoe does not fit all, every market has a cycle. On a 10-year basis, I take Nimesh's point that value investing will perhaps give superior returns. But what about next 3 years? What about next 4 years? What about next 5 years? Because the excitement has just started.
Actually, it's not so easy, because if you see the last 10 years also, if you go and see 2007, that was a year where value investing, not just in India, but across the world, didn't do very well. But what we have seen is over 3 to 5 year periods, what we've seen is there is something which is value. Today, for example, as we speak, oil has come down 40%.
So is oil value?
Oil could be value.
Okay.
So today you may have markets close to all-time high, but oil is down 40%. So you look to see what has got hurt by oil price drop. And therefore you look for areas where that could be a benefit. So value investing is something very interesting, because all the time something will be cheap. It's very, very rare that everything is costly at the same time. And we've seen that for example, what we've seen from our looking at the past is that when everything is costly, normally gold is cheap. Why? Because gold is a symbol of risk.
So a couple of years ago, gold was value.
Gold was value, or I would say 2007. If you look at 2007, gold was value. It was really doing badly, and from there, how gold moved. So we go through these phases, and the only thing, as Nimesh pointed out, is that you can't predict the time period where exactly value will work. For example, in 2007, value failed. In 2009, value worked. So, you could not have predicted in 2007 that 2009 was the year where value worked. But what we learned, if you buy low and sell high, in the long run, you have to make money. And the problem, if you ask me why people haven't gone into value investing, somehow there's a trading mindset in investing in equities. And why that happens, I don't know, because over the last 25 years, over the last 10 years, even over the last 5 years, it's been one of the best performing asset classes. But somehow people think of investing in equity as a trade. When people ask me why, I tell them it's too easy to sell today. You're very sure you'll get your money in 2 days. In most of the asset classes, it's not easy to sell and get your money in 2 days. That, I think, is the reason why it's become like this.
Is technology playing a part in destroying value investing? Algorithm trading, emotionless trading, machine trading.
Too much information coming out at every hour on our phones and on our iPads. That also creates too much. We try to take a call, like Warren Buffett put it, that he wants to buy stocks in a way that if I buy it today, the market is closed for 5 years. I'm not bothered what the price is tomorrow. Right? I bought it today. I saw value today. I bought it today. Assume that the market is closed for 5 years.
We'll have to close this conversation for only 3 minutes because we need to take a commercial break.
Okay.
When we come back, we'll continue to talk about the different facets of value investing. Buy low, sell high. That's the school book definition. But the real practitioners, how do they identify a hidden gem in a bull market? More on that right after this break. Welcome back in conversation with Nimesh Shah and Naren of ICICI Prudential AMC, and we are discussing the exciting facets of value investing, what really makes a true blue value investor. Nimesh, a common Indian housewife, she is an expert with the sabji wala, with the kirana wala, and when she's shopping, she's always hunting for value. Yet when it comes to an ordinary Indian investor, we always like to buy into fashionable stocks. Stocks which are popular, stocks which are in demand, and stocks which your neighbors are buying.
It all boils down to one, whether you are ready to take a contrarian call or not. And contrarian call is a very difficult call to take. Psychologically, from behavioral finance point of view, it is not easy to take a contrarian call. Even in business, when I've been working with Naren for now 7 years now, and as a CEO, when your fund manager takes a contrarian call, it becomes that much more difficult because you have to justify to the whole world. Just now he talked about oil. So suppose when oil has gone down from 110 to 60, for him as an investor, he believes this is cheap, this has become cheap, I should buy this because he believes in cycles and cycles will turn at some point of time. But to take a call right now on companies which benefit out of, which are losing because of low oil, that will be a very difficult call to take. It's a very lonely and difficult call to take. And somewhere investors in India, only after seeing now, this is the time to promote value investing big time in India because we have got a 10-year track record. In a 10-year track record, this is the time Indians will see those 10-year track records, and I'm pretty certain value investing will become big in this country.
So Nimesh, there is 10 years of data, and 10 years of data I think is good enough data for anyone to get convinced. Do you think now the way forward for an average Indian investor is to lean towards value?
In a market which is so buoyant, why are we talking about value investing today? Because we believe, even if you would have invested in 2004, roughly if you are in that same phase today, 2014, if you are in the same phase as 2004 was, and the next 3 years, over the next 10 years, what has this fund done? Similarly, if we introduce the concept of value investing to people, and so the idea of working with ET now and this is that let us make this concept of value investing common amongst the common man. Let everybody see what is value investing. So we are spreading it over the whole day, where we want people to go through what international experience is on value investing and what our experience in India is value investing, and how in the long-term basis money can be made out of value investing in this kind of markets.
Naren, the prophets of growth investing would say that there is nothing called value. Stocks are cheap because there is a problem with the company, there is a problem with the business.
But prices are set by buyers and sellers. So I think crude oil is the same 4 months back and today. Why is crude oil was $110 in July, and why is it so low at this point of time? So, there is a question of greed and fear. So right now the person who's selling is fearful. So he's selling at whatever price it is now. So what we've seen over long periods of time, you have these greed and fear cycles. So there are cycles when there is greed, there are cycles when we have fear. So when people say that, growth investing is the way to go, I tell them that there are periodic periods of time when you've seen greed and fear. And I think I would say the last 15 years, we've seen such beautiful periods of greed and fear, like 1999, 2000, 2007, 2008. So we've had such beautiful opportunities to show that, you have these periodic greed and fear cycles, and value investing basically capitalizes on those cycles.
Like Buffett said that you should always sell greed and buy fear.
Yes.
But Naren, right now there is a bit of hope and euphoria. So what should a proponent of value investor do?
So the proponent of value investing tries to see where there is fear.
Where is fear? So why don't you tell me? I don't see any fear.
The fear is there. You talk about an oil commodity complex.
You cannot be buying oil in your fund.
Hey, you can't be, but there are stocks which definitely get hurt by oil prices going down. Today iron ore prices are down, cotton prices are down. There are many other prices which are down. So you have stocks which have underperformed for 7-8 years. There are stocks which are lower than where they were in 2007. So frankly, if you ask me, at all points of time, you can find stocks in fear and with some problems, and you look to buy them, and you'll be lonely in that, but you can make money with that kind of strategy in the long run. It's just that we can't tell you when the fear goes away and when it becomes greed.
It is something like, once we had discussed, something like there is a sale, right? The sale is going on. You are buying it in the sale. The only problem in this sale is you don't know when the sale is going to end. When the sale ends, then the price will be back to the same prices. So the challenge in value investing is you're buying in a sale, but you don't know when the sale will end.
It's like a billboard ad which says, hurry, last 2 days.
You don't know the last 2 days.
Okay, one part of value investing, Naren, is that you have to be in contrarian. You have to buy stocks which are cheap, which perhaps are trading below the intrinsic value. But the other facet of value investing is that you need patience. And for value to unlock, you need to sit on that stock or on the, or in that particular investment. So how do you imbibe the virtue of patience?
See, I think patience comes by looking at markets over long periods of time. And, for example, you do go through these phases. But, what people don't realize is, you're not going to see, landline phones become the rage. That's gone. So you can't have patience in something which you believe is obsolete. So if people think that you're going to go to the landline phone era, it doesn't look to me. So you have to be acute. You can have patience, but the key to success in value investing is actually a good idea of value. If you don't have that good idea of value, you could be sitting on, let's say, Kodak, a camera company which was so important, but over a period of time the camera moved to a mobile phone. So you have things like that. So you have to be well aware of value, and that's where the job becomes more interesting, because you can't buy everything which is cheap. If you bought everything which is cheap, then some of them will go to zero. You can't. Value investing, people think, is the art of buying cheap. It is the art of buying cheap against what is the intrinsic value for that stock. That is value investing. People sometimes mistake value investing to being buying cheap. It is not buying cheap alone.
So landline is obsolete. There is a bubble, or there is a euphoria in the smartphone market. Where is value in the telecom sector?
The telecom sector is a sector which is not done well for 7 years. Now it's a regulated sector. You had a certain view of how spectrum pricing would be. Things have changed. But so what we have to do is we have to do and it's a technology oriented sector. What happens is things change. So you have to be aware, that's why Warren Buffett believes that at times if you find consumer stocks very cheap, you have to buy them, because toothpaste or Coca-Cola or those kind of things, they stay on for a long period of time. But in technology oriented industries, you have to do better work.
The rate of change is going to surprise everyone.
Another major reason why value investing should work much better in India, because we have got 6,000 companies in the market, but only 300 of them are majorly research. So there is an information gap in a lot of companies in this country, right? Because they are not research enough. So if you've got a strong research process, amongst that 5,700, maybe you can pick up some gems before the rest of the world can pick them up, and maybe you can show after buying them, the world can see after you have seen them. Then that is where also in India, in fact, since it is lesser research than what American stocks are, the opportunity exists at that point of time also, because of that reason also.
Nimesh, any mutual fund offer document has one standard line: past performance is no guarantee of future return.
Correct.
But unfortunately, all mutual funds are measured on return. The challenge with value investing could be that NAV could suffer in the short term, and NAV or performance is the only measure which is considered to be the best measure by your customer.
We say everywhere that performance is only a threshold.
Okay.
Performance is a threshold. That means there are processes that are working in the company. After that, we are completely a transparent industry. You know what we have done in the last 10 years. You know the processes that we follow, the philosophy. One of the reasons of doing this summit is also people understand the philosophy. People understand the thought process behind what we are doing. So it's a mix of a lot of other issues. Performance should be there, because what is the proof that all that thing is working? I am only saying that 10-year performance is only a proof that what we believe in and what our processes are and what our thoughts are working. You will have to take a judgment on us also, that how genuine we are on what we are doing and what we are planning to do. And we are measured every day.
But in general, before I take a break, just to summarize, the whole value investing approach is that you should be there for long haul. 2 years, 3 years, if you have that kind of a time frame, maybe this is not the style which really is your style and which will fit your investment philosophy.
And 3 year plus is what the mutual fund investors are now staying. It has changed in the last 5-6 years. The current life of a mutual fund investor is 3 year plus. So that's where this value theme will work also, because 3 year plus he can come into value.
Okay. Well, gentlemen, stay with us. Let's take a quick break. When we come back, we'll set the stage. We'll set the stage and we'll talk about the agenda for India's first true blue value summit. What should you expect on ground and on ET Now on 30th of December? conversation with Nimesh Shah and Naren of ICICIPruMF. Okay, now let's set the agenda. 30th of December, grand event. All of us are excited. So what should one expect on that big day?
Basics. We should expect only the basics of what are the, one is that the simple concept of buying low and selling high. How has it been practiced? What in international markets, Mohnish is coming in from what he has, the person who has written Dhando. So he's coming with his experience of value investing in USA. Naren is speaking about value investing in India. And then we are taking people through the exact experiences that we have had over the years in value investing in India over the last 15 years.
Naren, we are expecting a packed house, and our ETNA audience is also excited to really capture that basic value summit conference. But what should we expect to hear from you that day?
How to make money in the long run and be willing to take that pain through a bubble which happens once in 10 years is, I think, what I have learned from value investing over the years.
Give me an example that how sometimes this market or volatility in the market has also challenged your belief.
See, if you see, 2007 was the best experience that I have seen because, markets went ballistic. And during that period, the more irrational you were, the more money you made. But finally, all irrational booms come to an end. And the opportunity did come in 2008-9. So I would say 2007-8-9 was one of the periods which showed the power of value investing, the pain and the gain.
So as of now, even though markets are at a historic high, the Sensex PE is trading above its historical averages. As a practitioner of value investing, you think there is a lot of value in the market?
Yeah, because what we learned by looking at value is there is something called an economic cycle. And in that economic cycle, we look at things like industrial production growth, credit growth, revenue deficits. What you see at the top of an economic cycle is high industrial production growth, low revenue deficits, and high credit growth. We are at the opposite end now. And it is at the high of the economic cycle that you have to be actually cautious in equities. And so we are at the bottom of the economic cycle as per the value investing model. And I think definitely the opportunities are there from this bottom of the economic cycle to top of the economic cycle. What I don't know is whether it will take 2 years, 3 years, 4 years, 5 years. But that I don't know. But that opportunity exists for investors in India.
What is the biggest challenge for a true blue value investor?
The biggest challenge is to be a contrarian, to wait, to be patient, and when things don't work out, also you have to wait patiently for 3 years. That's the challenge.
And if the CEO gets worried about the NAV underperformance, Naren, how do you handle that?
And that's something I have seen in my life. But I think we need patient investors. And I think once you have patient investors, Seth Klarman says to be a successful value investor, you need good investors, because it is the good investor who's patient at the bottom of the market, or he looks to double at the bottom of the market. And for successful value investing, you need investors who believe in value investing.
We've talked about Buffett, we keep on talking about Munger, we talk about behavioral finance. Those are all borrowed quotes. I want the original S. Naren quote before I wrap the show.
So I think the time to buy is when you have blood in the street, but that's not the easiest job. It is a borrowed quote, because one thing I've learned about investing is you learn from others' mistakes. So, you may not have an original quote, primarily because you have to learn from the gurus. And there are so many gurus who have practiced value investing for decades. The best thing is to learn from experience.
That's the beauty of value investing. It is a simple method of investing which has been endorsed by the gurus, and the practitioners endorse it completely. Nimesh, Naren, gentlemen, it's been brilliant interacting with you. Thank you for this lovely interaction, and thank you for introducing our viewers to all aspects of value investing. I'm sure our viewers now are looking forward to that grand event, India's first true blue value summit on 30th of December. I'll be there and I'll see you.